we are joined by the CEO at Suzlon Energy, JP Chalasani. Good morning, Mr. Chalasani. Welcome to the show.
Morning.
Yes. First, I want to congratulate you for the big order win. At first, just give us the details of the order. How will execution as well as revenue recognition play out with this?
This is 370 megawatts, 370 turbines of 3.15 megawatt each, and the 3 different projects all in Gujarat to be completed. And these projects need to be commissioned from December 25 to February 26. Means the whole thing is to be commissioned by next financial year. So therefore, obviously, the supplies would start this year for this project. And as you were mentioning earlier, there are 3 projects, and this has not just the supply contract, it also has the foundation erection contract, plus it also has a 10-year OMS service contract. And the service contract starts immediately after commissioning, unlike other places where we have a 2-year warranty period and there's a free OMS starts after that. But in this case, this service revenue starts right from the day one. So there are 3 contracts: the supply contract, the BOP contract. BOP includes the foundation direction, and the third one is the OMS contract. So the revenues would start going from this year itself because supplies would commence immediately. And the added advantage here is that the NTPC went ahead and awarded the land acquisition, 33 kV, other BOP much in advance to other contractors. So these sites are much better prepared for us to move ahead and do the foundations quickly and supply and direct. I think that's advantage that we expect these projects would be commissioned on or ahead of schedule.
Right, Mr. Chalasani, I'm Harsh also joining in. I want to quickly try and get your take with regard to how the timelines for this are expected to play out, as well as on a per megawatt basis, how would revenue start to trickle through? So just to try and get viewers, investors to understand that piece.
Yeah, obviously we don't, as a policy, we never talk about individual contract value-wise. As I said, that the revenue will start coming in, let's say start from towards the end of Q3 onwards, because supplies will commence, and the entire 1165 megawatt will get completed between December 25 to February 26. Means next financial year, everything will get completed. So revenues will start from, let's say, end of Q3 this year, and the entire project will get completed by the 4th quarter of next financial year. So the entire project will get completed.
Mr. Chalasani, in terms of margin profile, I know you don't speak on terms of, order specific, but now this entire order is in the S144 model, and so is your over 88% of your order book. So could you maybe give us the range in terms of how, what the margins look like for this model itself, because it's gaining so much traction?
No, as I said, unfortunately, we don't give a guidance on the project-wise or the model-wise. So the guidance, whatever we give in the investors conference, is basically on an overall basis. They saying that 6 crores per megawatt is an average price for what we get, because there are different contracts of different scopes. So normally, it works out to an average of 6 crores per megawatt is the revenue, which it works out. And as we also keep saying that whenever we do up in each year, the moment we do 600 megawatts of execution, we will recover our full fixed cost for this division. And thereafter, everything what we sell straight flows to the EBITDA. So therefore, more we do beyond 600 megawatts, the EBITDA margins would substantially keep increasing. That's how it is. See, the main thing, a couple of advantages here is that this project is the certainty. Because of the advance action what NTPC has taken it, because we have always been saying, I said this in the interview as well, supply has never been a constraint for us. Okay. So therefore, because the advance action, this project can offtake turbines much quicker, and the project can be completed much quicker. So therefore, there's a certainty of revenue. And also this is our first contract with NTPC. And the last few years, we couldn't bid for public sector undertakings because of our balance sheet, but now that being corrected, that being strengthened, so therefore we'll be able to participate in the PSU. So as we move ahead, what would happen is that till now, each time we were saying that even earlier 3.8 gigawatts order book before NTPC, we said 2/3 of order book is C&I. What will now happen is that henceforth, while C&I would continue to grow, our public sector share will continue to grow because we'll be bidding more and more projects in public sector. So I think the major portion of our order book would be from public sector and the C&I segment, where the projects are expected to happen much quicker compared to some of the utility PPA projects.
All right, Mr. Chalasani, before I get to the 5 gigawatt order book that you now have, I want to try and get in viewer perspective from you with regard to the kind of opportunity size this opens up for you. You've said that now PSUs come to the fore for you, that opportunity opens up for Suzlon. So how large is the opportunity for you now?
See, opportunities. Let's look at the sector itself is an opportunity because we don't exclude ourselves from any opportunity. Today, the installed capacity is 47 gigawatt, and we need to reach 100. Um, Whatever different estimates, whether we reach 90 or 100, and if you want to do 50 gigawatts in the next 6 years, that's what is the opportunity what we have. And in India, we've been number one in terms of market share, and we will continue to do that. So therefore, for us, more important than the opportunity is that the quality of orders what we book and certainty of execution of those orders is much more important for us than simply saying that we have so much of order book. I mean, that makes a big difference. Every single order what we take is a quality order. It has PPA, it has a financial closure, it has everything. So therefore, that project would certainly will happen. I think that's more important for us. Otherwise, just counting the opportunity and saying that so much of order book is not going to really help. Those orders should be in a position that we should be able to go and execute it in the limited time period.
Right. So are you being choosy, sir, with regard to the orders you're taking on? Are you being choosy about the orders you're bidding for?
Yes, yes and no. Yes, in the sense is that uh, we look at the quality of the order in terms of what stage that project is, what stage, if it is only a supply contract, what stage the land is available there, whether this project would happen in the timeline. Otherwise, what happens is we take and block our manufacturing capacity for the project and the project gets delayed, then we are in trouble because we blocked and we can't even tower turbines. So therefore, I don't call it as pick and choose. We call it as we analyze the project and its timeline, and accordingly we take the projects. So one way, yes, we do the quality check of projects more from the point of view of execution capability and whether the power purchase agreements have been signed, PSAs have been signed or not, and those are the factors what we check. And every single contract what we have in this 5 gigawatts passes the test.
Right. So just given the kind of opportunity size available, I'm sure margins would also be playing a factor to what you bid for. Is there a number in mind with regard to what kind of margin or profitability you wish to achieve on the orders that you bid for?
No, there are two factors. One is, as I said, that margins would significantly improve with increase in quantity. As I said that, our break-even is at 600 megawatts for WTC division. So more we execute, more money we make. But as far as just because there is a huge demand in this country, you're not going to increase your turbine prices because at the end of the day, we all are guided by the tariff. Okay? So because the tariff is what the revenue gets fixed for the IPPs or any company. So that puts your pressure on to what extent you can actually put, the turbine price could be. I don't think just because there is a more demand, you can keep increasing your prices of turbine. You can't do that. The tariff is a limiting factor. So that would limit to what extent you can put it. But the economy of size, efficiency, and then more we do and more money we make from that point of it. EBITDA margins will increase significantly. So because we recover fixed cost 600 megawatt, but expecting that we will be able to increase our price is not the right thing because which we normally don't do. Because for us, what is important is long term. In the long term, wind sector has to sustain. The tariffs have to remain within a certain range. So therefore, we support that.
Got it, Mr. Chalasani. You said, in terms of it's the quantum that matters. So how much do you expect your margins to grow? The 17% that you're doing, do you think that's a reasonable number for investors to expect going forward, at least for FY25?
I think our guidance has always been constant. We said that high teens is what we will be, and we remain with that commitment.
Yes.
So
Okay, now let's...
is constant.
Yeah, let's just talk about your larger pipeline now. It's filling fast. There is demand in, in terms of, so what's the bidding pipeline looking like? Also, kind of give us a perspective. Last time you spoke to us, you said that you want to grow the foundry as well as the, all the other business verticals to grow independently. So how are the contracts, broken up there?
Yeah, here if you look at this contract itself, as I said, while it is a supply and POP contract, it also has a 10-year service contract. So therefore, this entire 1.2 gigawatts, I'm just approximating it's 1.165 gigawatts, would get into our service revenue next year onwards. So therefore, straight away, the service business would keep, to that extent, would keep enlarging itself. This is one field. I'm not talking right now about the multi-brand. So therefore, each of the sales what we make, that is actually we're not just looking at one-time revenue of turbine supply. We're looking at it as a long-term 25-year supply by service contract. The here confirmed contract is for 10 years, and obviously it is subsequently it's extendable. So therefore, that's how the service business increases as we keep increasing the sales of turbines. And as far as the forging and foundry, what I talked to last time is that that division is now looking at expanding significantly into non-wind and as well as expanding significantly into export opportunities which are coming because of China Plus One strategy. So that's where that business, we have a separate strategy for that and it's going to grow.
Got it, Mr. Chalasani. I also want to talk about your capacity utilizations. Now, the aspiration is 90%. So what would it take to reach the 90%? And realistically speaking, in the next 2-3 years, what can one expect?
We just had I thought that we had a large interview of 30 minutes recently. So obviously, I said what I had to say at that point of time. I said that it is not a question of market share. My answer was that it's not a question of market share. What we attempt is that if I have an X manufacturing capacity, can we utilize to the extent of 0.9x, 90% of it? So today that's not happening. Today we're at 30-35%. Let's say that is what has to increase. That will increase with the projects which are certain to happen in terms of timeline wise. So NTPC is one which adds to that strategy of what we're having of enlarging our capacity utilization factor. Because we know certainly this 1.2 gigawatt, I'm just again approximating it, supplies would happen starting from, as I said, that the end of third quarter this year. So let's say the middle of next year, because thereafter it was only erection commissioning. So the next 3 to 4 quarters, we'll be able to supply this 1165 megawatt, these 370 turbines. There is a certainty. So therefore, our capacity utilization factor with such contracts would keep increasing. And we'll move towards our target of, can we reach 80% of capacity utilization.
Right, and so just give us a view on the pipeline, on the bid pipeline. How is that like? Both domestic as well as export. What's the opportunity looking like in terms of bid pipeline for FY25?
No, there is. That there's 25 gigawatts of order has been placed on this, but my suggestion is that today let's restrict to NTPC and NTPC order because we just recently spoke about it. Opportunity was large. There is 25 gigawatts of the pipeline which is announced. There's another 25 gigawatts of orders in different places of these things. I don't think opportunity is an issue. Issue is actually resolving the issues on the ground and getting the projects moving is what it is. But it's not the question of how much is the opportunity. Opportunity is out there. But converting that opportunity into on-ground commissioning of the projects is what is important. As I spoke sometime back to you, Sandra.
Right. So, okay, I'll stick to this order because you've overemphasized on that. So, with regard to the O&M component of this order, what's the annual revenue that one can expect once all of this is set up, say FY27 onwards? You've suggested that O&M will kickstart at the start of the order execution itself. But just talk us through what that does to your top line in terms of how does it contribute?
No, obviously it's 370 turbines. Today we have 14 gigawatts operations. The state, that is increasing beyond the 1.2 gigawatts. So proportionally that much revenue is going to increase. And the thing is that it's going to increase faster rather than other contracts where we need to wait for 2 years. So straight away adding 1.2 gigawatts to the existing 14 gigawatts. That's the expectation. That is the revenue proportionally would go up from this single contract.
Yes. Thank you, Mr. Chalasani, for joining us, and we wish you all the best. It was lovely talking to you, sir.